Hi there, this is Taylor with HACK&Co at RE/MAX River City, and we are about to decode the market stats when it comes to what's been happening in Edmonton real estate over the month of July as we wrap a really interesting first part of the year this year. I'm going to welcome in the HACK&Co teammates. How are you doing this morning, Amy? This is Amy Brown.
Hi, I'm doing great.
Oh, fantastic. We've also got Anthony D'Souza. How are you doing this morning?
Doing pretty awesome.
Fantastic. And Craig Bentley. Looking good, Craig.
Appreciate it.
So I think that we have to open this with maybe something like, can you tell us a little bit about situations that you found yourself in the last month here? What's actually happening on the front lines? Anybody want to take me into a client story?
Yeah, absolutely here. So we're starting to notice our market is transitioning more towards the balanced market, maybe even starting to creep into a buyer's market in some sections. So we're starting to see some deals out there. We've been speaking with a lot of buyers that have been waiting for this market to crash, prices to go drastically lower. But we're seeing a small increase. So there's starting to be some opportunities out there. For example, I took a family through a home priced in the $700,000 range. And based on when they came to the market, they were a little bit overpriced. They were probably looking at comparables back in May. Well, we ended up negotiating $40,000 off their purchase price. So there are some deals to be had. You just have to go out there and look for them.
So you were able to what price point was that house in?
The 700,000 range.
700,000. And when you were to take a look at like the percentage off, I think that you were about 40,000 off that place, right?
Correct.
Yeah, so that's a pretty wide margin. That's over that 5% mark, and that's a pretty good deal for the buyers that you were able to catch there. Now, this is what we're also talking about with turbulence, because Amy, have you been having the same experience?
I have not. So I'm working with a lot of buyers right now. And even just this past weekend, I was in multiple offers twice. In this past month, I've been in multiple offers 4 times, and sometimes losing at them if we are trying to get that deal and really grind. So you have to know where you're offering, what's happening in that specific market. Don't just assume that there's these deals to be had absolutely everywhere.
Okay, so this is a big difference even when you approach these two properties, because Craig, was your property new to the market?
No, it had been on the market for about 30 days.
Amy, were the properties you were approaching to new to the market?
All of them, yes.
Okay, so this is also something we've been experiencing with our listings as well, right? Those listings that choose to basically come into where the market already shows evidence of being active for properties similar to theirs, they're actually seeing those opening weekends that just punch, right? And on the other hand, there's some people that are kind of testing the market. They just want to see how the market will react, but are more hoping that they will achieve over where the evidence is that the market is active. They are sometimes waiting around a little bit more. And I don't think that the metrics work out in their advantage in the end. Because when we take a look at if you are at market value when you're brand new to the market, people are so afraid that someone else is going to buy you. And if you get to market value after making several reductions, do people feel that way?
Not the same way.
Nope. There is much less urgency. There's much less concern about missing the one, which only leaves the concern for paying too much. So really, I think that the market's rewarding accuracy right now. Is that what you see as well?
Absolutely.
So did you guys enjoy the read that was the Realtors Association of Edmonton statistics?
No.
I was seeing what's going on.
Was it riveting? Would you recommend it to others? I don't.
We wouldn't recommend it. I feel like we have a better pulse. Like you can check your pulse to see how your heartbeat's doing. I feel like we're tuned into that already. And so it was more of like an overview of what we're already experiencing.
Well, let's dig into it a little bit. We were talking about months of inventory. So, Craig, can you kind of give us a definition on months of inventory?
Yeah, months of inventory is how long it would take all of our current inventory to sell if no new properties came to the market. It also gauges which type of market we're in, whether we're in a seller's market, a buyer's market, or a balanced market. And right now, we are seeing 4.2 months of inventory, which is up about a full month's worth of inventory from June. So we are definitely transitioning into a balanced market. And as I mentioned before, slowly creeping into a buyer's market in certain segments.
No, that means the market is crashing. The market's crashing, right?
Of course.
Well, tell me why it's not crashing. You've gained months of inventory, right? Is this not a sign that the end is near? Or maybe they say the end is nigh?
Well, if we're looking year over year, properties always accumulate on our market over the summer months. Families are out having vacations. The last thing that they're doing is buying real estate, but they're having those conversations. So our fall market, or the autumn market, as we like to call it now, is going to be the most second popular market of the year. So all of these families that are out on vacations, they're having a couple drinks and talking about real estate. They're actually making some plans once their kids get back in school.
Yeah, and I think that more people should understand that, like, we're not blind to the obvious, right? Interest rates are changing. That's going to stifle some demand, and we're going to see some additional supply. But what we are seeing is most of what's dominating the news, it's not about us. Mm-hmm. Right? Like we review the news weekly, and taking a look at what's been dominating the news, like how would you describe what we're seeing in the news, Tony?
I would say that it's almost like they're just focusing on, the BC and Ontario markets that were so inflated over the years. And yes, like it will feel like things are crashing there because they're taking, much larger percentages off what places are selling for right now. Sellers are having to relist for a couple 100,000 less than what they were if they tried even like February or March of this year. And so
that's in places like Toronto and Vancouver, right?
That's right, specific to those places. And so because when you talk about real estate, most people talk about real estate as a Canadian real estate market. And since it's so localized, you really have to look into Edmonton specifically, or the greater Edmonton area. And because it's so affordable here, a lot of these things aren't really affecting us like they are in other places.
Yeah, so that's why Craig was saying we're calling it the autumn market now, because if you type in fall real estate market into Google, all you see is doom and gloom from Toronto and Vancouver. And to decode this a little bit, during the pandemic, like 4-year period, things in Toronto were 50% more. And we're talking about properties, right? That means an $800,000 property was worth $1.4 million after only 4 years. So because there was that hyper acceleration, there is also some room for correction. And it's not very affordable in those markets. That's a term that they use a lot. Can you give me a definition of affordability? It's the cheapest one, right?
Definitely not. I mean, we were talking about this, about, how many, incomes it would take to afford a property in a certain place. And so I think we were looking at, like 15 to 17 times the average household income to buy a property in Toronto or Vancouver. And in Edmonton, what is it, like 2 to 3, maybe even 4 times the average income? So that's drastically different. And that's why we're seeing people relocating here.
And that was another one of the big stories that was kind of coming to the market, coming in the news, but a little bit quieter, is how many people are moving to Alberta. Like we're setting records with net migration in right now. And since real estate is based on supply and demand, that's actually like what months of inventory is supposed to show us. If the supply is more than the demand, well, then what people want is buyers. Therefore, it's a buyer's market, right? Buyers are the rare group, and they have more control. If the market is above that 3.5 months of inventory, we're going to say, okay, this is a buyer's market. But if it goes and sways the other way, like earlier this year, we saw 2.1, right? 2.1 months of inventory. That's a smoke and seller's market. Things are going up in value. When we were talking about the March, right? Like Amy, you set a record in March for a listing that you brought to the market. How many showings did it have on opening weekend?
Oh man, I don't remember. So many that we had to make a list, and it was a giant.
Yeah, I think it was over 60. And so when we take a look at an opening weekend like that in a seller's market like we saw in March, now we're into 4.2 months of inventory. So Craig, you were kind of giving us a recap on this. 4.2, seller's market, buyer's market, balance. What are you calling it?
Balanced at this point. We're just creeping into that buyer zone in certain sections, but overall it's balanced.
All right. So you're still thinking that what would you say, Tony, when you're out in the marketplace, does it feel balanced between buyers and sellers? Your buyers getting steals, your sellers demanding more? What is it?
I mean, for the most part, it feels pretty balanced, but it really depends on the property type and the price point. And that's, I mean, we could say that about anything, but I mean, at the best part of our market, what was it, like 1.5 or 1.6 months of inventory? And in these other markets that we're comparing, Vancouver and Toronto, they were at like 1.5 weeks of inventory at their peak.
Like 3 days. Yeah.
Like sometimes they were even faster, right? So like we were like screaming our face off at 1.5 months of inventory, and that was pretty awesome. And those other markets were like days to a week on
and we just flickered into that edge, right? We just flickered into like what we saw sustaining for years in Toronto, right? And so that's something that should help that the people out there that are taking a look at the Edmonton market to understand this isn't inflated here. And where you see more inflation, you will see more correction.
Mm-hmm.
So, Craig, what do you think about year over year? Like we said, we were up a month's of inventory from June to July, but is that normal?
Absolutely, it's normal. Last year, from June to July, about 6 months worth of inventory was gained. So we gained just over a month. But what we have to take into consideration here is when there is high demand, it calls inventory to the market. So everybody that was paying attention back in March and April, seeing all these multiple offers, they decided to put their property on the market too now. They called that inventory to the market. They were a tad bit late, but overall, we're still seeing lots of properties sell quickly and for good terms as well. So even though that they didn't come on necessarily at the peak of the spring market, they're trying the summer market. It's still not to a point where, like you mentioned, we've got 9 months of inventory and it's a drastic buyer's market.
I would totally agree. So when we're talking about inventory overall, right now, there's about a little over 8,000 properties for sale in the greater Edmonton area. When we talk about what was happening in March, where we were saying it was an extreme seller's market, we were seeing only about 5,300 properties on the market throughout Edmonton, but also more action, more stuff coming onto the market and leaving the market. Tony, when you were looking at the ratios, what did it look like? Like what, just to give you kind of a definition on this, sales to new listing ratio is showing in a single month what's coming on and what's leaving, right? It's not so much a measurement of overall inventory. So can you break that down a little bit for us?
Absolutely. So what we were seeing in July of 2022 is we were seeing that for total residential, we were at about 55% of those new listings selling in that month that they're, coming onto the market. So this isn't bad. Some people might say, well, 1 out of every 2 properties that's listed is selling. And what we would say is this is, down about 10% from where it was last year and the month before. But the last couple of months where we were talking about it being super hot, like that, April, May, March area, right? They were humming along at like the 75% of the listings selling. And so that's why we were having a lot more multiple offers. Those brand new listings that were new to the market were the ones getting most of the attention. And that's what Amy's seeing right now is those brand new listings in those areas where there's not a lot of inventory or the really desirable stuff is still going in multiples. But we're just seeing right now there's less attention. People, we only get a couple of months of excitement here in Edmonton where we got like awesome weather. And so people are enjoying themselves. And this inventory that we're seeing would be a normal amount for this time of year. And so although it might seem like it's coinciding with the rest of the news that we're seeing, it's just normal. We've got this And yeah, you just have to be like a little bit more sharp on your price. You can't be looking at the stats from a couple of months ago when your neighbor sold. You got to look at stuff that just recently sold in the last couple of weeks. And so, yeah, sales to new listing ratio, about 50% likelihood to sell month over month. And I would predict, you know, by the time you look at September stats, we're going to be probably up around that 65 to 70% range again.
Yeah, because like really, when we take a look at this year to last year, my crystal ball is cloudier than yours. I'm not sure exactly what we'll see as it goes forward, but we were there. It was 10% difference. So when we see last year, we're seeing the cycle of things coming on and leaving the market in a single month, right? So if we put 10 properties onto the market, we're not saying that any one of those 10 is what we're tracking. What we're seeing is how other properties were leaving at the same time these ones were coming onto the market. And when that cycle gets really fast, like when the market's consuming everything as it hits, like remember when duplexes, like in February of 2022 here, they were at 98%. So that means that their days on market was inside of 30 days because they were being consumed really as they hit the market. One of the hottest properties during pandemic. And now what we're seeing is a market that is a little bit slower than what we saw last year. Duplexes were hot, 81%. And now they're at 65%. So that order has kind of changed a little bit. And that's what you were saying is some of those people need to look at their micro market and say, like, are the duplexes moving the same way they were when these comparables I'm looking at sold? Because there is going to be some shifting. And I think that that's where we really do well in helping people understand how to put their properties to the market. Because, like, obviously when somebody calls us and says, like, hey, how much do you think my property's worth, that we just walk through and ask them how much they want to sell for, right? That's the whole process.
Yeah.
Amy, what happens first when we're going to come over and talk to somebody about the value of their property?
We do a lot of market research. So we pull all of the different information that we can from everywhere that we can possibly pull it to have a good understanding of where the property is. And then we're also pulling characteristic comps and price peers to kind of see where we would fit in the market.
So even before we go through a walkthrough, we're well researched. We know about the location, the characteristics, the condition. We've seen tax assessments, which direction the property faces. We actually understand a collection of properties that have been to the market and saw how the market has treated those properties. Like, we really have 2/3 of an evaluation done right before we walk through the door. And I think that that's a stark contrast with the experience that a lot of people are seeing out there.
Mm-hmm.
So Tony's saying that we're going to see a pretty exciting, Craig, autumn market, right?
Yeah.
Yes. So autumn market here. Tony, you were calling out some bold predictions, and you think that we're going to see the listings being consumed faster as the year goes on. What makes you think so?
I just think that this is typically what happens as we move towards, you know, the kids going back to school. There's a little bit more attention on the fall or the autumn market. Right as we move towards the end of the year, families are saying, you know what, maybe we weren't quite ready to list before because we really just wanted to enjoy the summer, and now we're thinking about maybe we are looking to make a change, or, you know, job relocations. And on the relocation side of things, like, we're seeing so many people moving here. There's so many families that have had enough, or they've been saving for so long and they still can't afford to, you know, to live where they want to live. So they're thinking, hey, maybe there's opportunity out in Alberta. And we've seen, you know, numerous clients moving here from the greater Toronto area and out from BC, and investors thinking there's good deals here. So I think that trend's going to continue through the autumn market.
And you know what I see is that some people are asking themselves questions, right? Because there's a lot of people that are thinking, you know what, if I hold out, I'm going to get a smoking deal on one of these houses. I keep reading in the newspaper, market's crashing. So obviously next year, I'm going to be able to get a discount. I have some questions about that. So what does it mean when the market crashes? Do houses get to be down to like 10% of what they're worth? Is this the same as stocks?
Absolutely
No,
not.
it's not the same.
Okay, so if the market were to crash, how much of movement is that? Like, is there a definition for crash? I don't think there is. I think crash is like an emotional word. It's like how you feel about it. Like, I think that if a market moves down 3%, okay, I think those people that bought last year, put 5% down and haven't really paid anything off their property are probably not going to have the same amount of options. And so to them, they may be like, oh, then the market crashed and I couldn't move to where I wanted to move, right? If the market goes down like a full 5%, maybe some families that bought with 5% down 3 years ago and are thinking that they might make transition are also going to find the same thing. Like when they go to solve what we call the seller's algorithm, can I sell for enough that I get to do what I want to do next? That it's not going to quite be the formula they were looking for. But then if the market moves down like 10%, now we're seeing that happen to even people that put 20% down last year, people that put 10% down 4 years ago and have been making payments. And we've actually seen that before as a market, right? We've seen this receding market between 2015 and 2019. And that's actually one of the things that's saving us now. Is our market is so affordable. When other markets say that they're going to crash, it's like, how do you fall when you're already lying down? And that's why they're talking so much about affordability and so many people are moving here. But when we talk about the fall market, that's kind of like timing, right? When do you think the fall market starts, Craig?
Right after Labor Day weekend, kids are back in school. Everyone's ready to start looking at houses again.
And Amy, how long does it take to sell a house these days if you were working with the average agent in an average strategy?
All right. So the average days on market right now for all real estate is sitting at 39. Everything's up about a week since last month, which actually isn't something to panic about. So if we look at our numbers year over year, we're actually still less days on market for condos and duplexes, and we're equal to where we were last year with single family and overall residential. So this is just a natural thing that happens at this time of year and nothing to get panicked about.
So we're seeing some movement on that. Like you were saying that it's a little over a month to sell an average house. And how does that compare for total residential to last year?
So it's about 5 weeks right now. So 39 days is what we're looking at. But total residential last year, we're exactly equal to where we were. We're exactly the same.
So we're still not seeing a significant change in those days on market. And we're also still seeing a really healthy appetite for single family detached dwellings, right? So when we take a look at how this is affecting pricing, what I see is that average price for total residential in July of 2022 is just under $399,000, right? And then when we measure that against last year, it was just under $390,000. So we are still seeing a total average price over. We're still seeing that demand a little bit further up the market. But what would you consider like things that maybe some people would be surprised with when they're looking at the Edmonton market right now? Like you were saying that there were some surprises at properties you could get deals on and also properties that were leaving really quick, right? That's happening. Like hot and not can sit next to each other. You know, they can be neighbors.
Yeah, literally on the same streets, we're seeing houses go in multiple offers and then other houses that are, less than 3 weeks on the market and they've made five price adjustments, right? That shows us that they're like nervous and maybe they were testing and it didn't work and they really got to sell. And so they're like, oops. We're like trying to figure this out, right? They're chasing the market. And it's kind of interesting to see, because like I said, we've been experiencing a little bit of a hotter market overall, but right now we're seeing deals that are out there. If you're approaching a property even a couple of weeks on the market, based on the recent comparables, they're probably overpriced, right? They're probably, at least 25,000 over in some cases. And just recently I had buyers that were coming from Ontario. They traveled across the country, had them set up on a search and they were eyeing up this property. And they're like, why does this property keep dropping $10,000 every week? And when it came time to looking at properties, they liked it so much. We wrote an offer and they ended up about 60,000 less than its original list price, like 24 days on the market in Ellerslie. And it's a great house. And yeah, those types of deals weren't around before. But I think that in this case, it might have just been one of those where the seller was saying, let's just try to see what's going on in the market. And they probably just misplayed their hand. But we're seeing that in other places in the market too.
Yeah, I would agree. I want to ask some questions that'll kind of pique some interest. So how would you describe the condo market right now? Let's go Craig, Amy, then Tony.
So it's starting to heat up a little bit. We've used that term defrosting. We're starting to see more buyers transition towards purchasing condos right now.
Amy?
I just received an offer on one of my condo listings this morning. So I think that it's starting to thaw out as well. The days on market is actually less right now than it was last year. So maybe we're starting to come up.
And we are tracking that inside of our office. So being a team, we actually have more information than many agents in the marketplace because we do so much learning from each other and do higher volume of transactions. So when we take a look at like the people on screen here, having done over 80 transactions this year, right? Like there's, between the three of you, you did more than 10 times the average agent's production this year. So when we take a look at gathering that data, we're tracking where these offers are coming from. Are these people having addresses that is from Ontario, from BC? Tony was mentioning the greater Toronto area. Like we're seeing a lot of migration patterns coming in there, and that's going to really help us tune our marketing to get those buyers ahead of our other competition. Tony, how would you describe the condo market right now?
The condo market overall is interesting. I also received an offer recently, and then, the same time I'm getting an offer on one place, another place is telling us about like a $20,000 special assessment. So yeah, it's a mixed bag out there, but honestly, like every property, it's really going to depend on how well it's taken care of. And with condos, how the board's maintained. But we are seeing investors circling the Edmonton area saying we can get good deals on townhouses and, apartment style condos, and those renters that, that have been renting for so long. And now they're saying, you know what, rent's getting expensive. And if it keeps going up, I'd rather just own my own place, get into the market, and then worry about upgrading down the road.
Yeah. And that's actually like a very consistent conversation in people's homes is like, are they going to wait till next year and maybe get a better deal on a house? That's one side of it. But how much is the money going to cost? Interest rates have been changing, and the market is not moving down to the same measurement that interest rates are increasing people's amount that they pay, and also decreasing the amount they qualify for. Those as interest rates change, so does the stress test. And that's something that has been impacting people in their buying ability. So when you take a look at some of the people that are measuring right now, they're like, holy wow, that property would have to drop in 20% if interest rates went up by 1% in order for me to actually get a deal on that. So that's one thing I think is kind of a hidden thing where people are maybe waiting for next year. They don't know yet the interest rate effect. They should be talking to mortgage people right now. Now, when we talk about those families moving from one place to another, people were terrified of that earlier this year. They're like, what if there's not another house? And that was a good question because there wasn't a lot of them. How do you feel the people that are moving on up are doing right now, listing and buying?
They're doing pretty good. I mean, they usually make good decisions if they're working with us. And so we've been keeping them informed on what's happening. And now they're saying, you know what, we're finally ready to do this. We've, got all of our ducks in a row. And when you're buying more than you're selling in the Edmonton area, you're likely, doing pretty good. You're getting that extra space that's required. Money is still relatively cheap. We're pretty much on par from where we were pre-COVID interest rates. Families need to move, so they should definitely do it here.
That's fantastic.
We're actually in a little bit of an easier market to navigate selling and buying at the same time. Back in March, people were terrified that if they sold their home, they wouldn't have a place to move to. Where now there's definitely some options. You can weigh out whether you'd prefer to buy or sell first rather than have a designated plan that has to happen.
I totally
That's a good
agree. I
point.
think those people that are moving on up are in a much better or easier position than they were earlier this year. And I think a lot of people should be looking forward to what's coming on to the market in the fall market, right? This is a pretty hot listing week for us. We got a couple of listings that we're putting up in Sherwood Park. I know that we have a couple of listings that are going up on the south side, even a couple of weeks out. In fact, a lot of people don't know that a group of realtors like us, we probably know of like half a dozen to a dozen properties that aren't on MLS right now that are thinking about selling or would sell, right? Like there's more than what you can see on realtor.ca. And a lot of it is about network, especially if you're looking for one of those kind of uncut gems. Is there any other thoughts on what we should be looking forward to as we come into this fall market?
I guess just not being nervous. Like, you approach something with a plan, and if you feel like you've got a good, team behind you, you can accomplish good things here. Try not to pay too close attention to the national news because they're really not talking about us. They're talking about these major, markets like Vancouver and Toronto because they are the kind of the, focal points for most things to do with business and real estate in the country. It's exciting. There's a lot of people there, lots happening. But, it's so affordable here. And with take a look at all the people that are moving their families across the country and, a couple of provinces over, they're doing that because there's opportunity here. And so that's what I would like to focus on the next couple of months.
Anybody else have any insights they're looking into the fall market?
So any of those buyers out there right now that have been looking for a deal, there's still 3 weeks left of our summer market before we jump into that fall market. So before all of these families get back from vacation and start house hunting, you should probably get out there right now because we have no clue what the market's going to be like in fall, but we are expecting things to continue on pace and pick up.
Yeah, I'd like to send a message out to you established renters out there. You folks that have been renting for a few years while interest rates have been at their historic low, the ones that are comfortable but have the ability to buy, I just want to raise the flag right now that now is the time. Interest rates and rent are directly correlated. So since interest rates are moving up, so will your rent. There's landlords that are giving notices across our country in record numbers right now. And you could stop the clock by going and getting yourself a mortgage that's like a fixed mortgage where the interest rate won't continue to rise. It'll get locked in when you decide to do this. But if you wait, you will be probably moving because you don't want to pay that much rent anymore, but paying a higher interest rate. Hesitation is kind of a rough one here. So you first-time home buyers, you established renters, give us a call. We'll help you on your way. There's great ways to do this. You can time it with your lease coming up, but I think those are going to be some of the big players into our fall and winter market because they're not going to choose the time they're leaving. As those notices go out, they're going to be handing in their notice that they're leaving.
I just want to say one thing too, and it's know your micro market. So not all markets are going to have crazy, crazy deals. You have to know exactly where you're buying and what's happening in that specific neighborhood, zone, etc.
Well, that is fantastic insight. I appreciate everybody for coming and talking to us a little bit about what was happening in July. We saved many people from not having to read this directly. The REALTORS Association of Edmonton does release very detailed statistics. There's several pages of them. So being able to decode this and also thread it together with some of the things that are happening on the front line is a huge value. Thank you guys for taking time out of your day this morning. I know you were smoking busy. So let's keep it up and keep going forward here. If you need more information, you can call us on our HACK&Co Fast Agent Hotline at 780-909-6770. We can give you more information on this and connect you to a great network of trusted experts if you're helping get your house prepared for sale, if you're looking at just regular things as a homeowner. We don't only help people that are home buyers and home sellers. We have a great past client database that is people that we stay in contact with because we continue to offer them value. Thanks again for coming in this morning, and thanks for joining us. I hope everyone has a remarkable day.